My name is Nakatani, President and CEO of Funai Soken Holdings. We thank you for your ongoing support to our group. I will walk you through the details of the financial results for the fiscal year ended December 31st, 2025, and the new midterm management plan for fiscal years 2026 to 2028, both of which were announced today at 12 p.m. Japan Standard Time. Considering the time given, I will only provide a summary of the financial report, with excerpts from the documents, and the details will be presented by Haruta. I would then like to continue by explaining our midterm management plan. This is the executive summary for the fiscal year ended December 31st, 2025. In the fiscal year under review, both sales and profits reached record highs, marking the fifth consecutive year of growth in both sales and profits. Capital efficiency, consolidated ROE of 26.5%, also achieved a record, exceeding the target of 25% set in the midterm management plan. On the business front, the mainstay core consulting segment and logistics segment led the way, achieving double-digit growth in terms of operating income. The number of consultants, a leading indicator, increased by 7.9% over the previous year to 1,098, and the number of management workshop members surpassed the 8,000 mark. Per contract revenue also increased 11.9% year-on-year for management workshops and 6.1% for monthly support, showing the results of our efforts in the numbers. For fiscal year 2026, the company plans to record net sales of 37 billion Japanese yen and operating income of 9.1 billion yen, and plans to increase dividends to shareholders for the 16th consecutive fiscal year. This is the status of consolidated profit and loss. Net sales were 33,330 million Japanese yen, up 8.8% from the previous year. Operating income was 8,113 million, up 5.9%, and ordinary income was 8,841 million, up 5.1%. Net income attributable to shareholders of the parent company was 6,526 million, up 8.9%. Although we achieved our sales forecast, announced last February by 1%, operating income, ordinary income, and net income fell short by about 1% each, due to the accelerated hiring of consultants and other initiatives, which I will explain further shortly. Next is the performance transition on a quarterly basis. In the corresponding quarter, sales were also positive year-on-year and increased in all quarters. Note that net income decreased significantly in Q1 and increased significantly in Q4. This was due to an extraordinary loss of approximately 2.1 billion Japanese yen from the sale of the Gotanda office in Q1, and an extraordinary gain of approximately 3.1 billion Japanese yen from the sale of the Yodoyabashi office in Q4. The following is an explanation of the key KPIs. Capital efficiency, as I mentioned earlier, reached a record ROE of 26.5%. We were also able to achieve our shareholder return targets for all 3 years, with a dividend payout ratio of 60.1% and a total return ratio of 98.1% in fiscal year 2025, compared to the medium-term management plan targets of a dividend payout ratio of 55% and a total return ratio of 60%. This shows the transitions of personnel and productivity. The group now has 1,651 employees, of which 1,098 are consultant personnel, a steady expansion. The consultant ratio also increased to 66.5%. Despite aggressive hiring, sales per employee surpassed 20 million Japanese yen for the first time. These are the results of management seminars and management workshops that serve as the starting point for our business model. The number of participants in management seminars decreased by 3.9% from the previous year. But this was due to the fact that 2024 was the year of the opening seminar for the relocation of the Tokyo head office and other large customer-attracting events. The management workshop, which serves as the foundation for stock earnings, continued to reach a record high with 8,164 members, an increase of 8.7% over the same period last year. This shows the trend of per-contract revenue. The management workshop saw a significant 11.9% year-on-year increase in its monthly per-contract revenue, thanks to the effect of the systematic revision of membership fees starting in April 2024. Monthly support consulting also showed a steady increase in per-contract revenue, up 6.1%. As a final part of the summary, I would like to explain the growth trends of our group since our consolidation as a holding company in 2014. Through aggressive M&A and group reorganization, our group has expanded its business domain, and sales have grown from 12.4 billion at that time to 33.3 billion Japanese yen, a 2.7-fold increase. We will continue to pursue sustainable growth through a combination of organic growth and M&A. Now, Haruta will continue to explain the details from here. Thank you very much for all your support. My name is Haruta from Funai Soken. We will now report on the details by segment. The core consulting segment achieved an increase in both sales and profit, with net sales up 9.4% and operating income up 11.5%. In the logistics segment, net sales were up only 1.1%, but operating income was up a significant 22.8%, improving profitability. In the digital solutions segment, sales grew by 13.7%, and operating income improved by about 60 million Japanese yen from Q3, but the segment still posted an operating loss of 96 million Japanese yen. As a result, we were able to achieve the segment-specific sales and profit targets set in the midterm management plan, with the exception of operating income from the digital solutions segment. We will now look at each segment individually. This is the status of sales in the core consulting segment by operation. Management workshop membership fees, which are stock income, remained steady at 15.8% over the previous year, and monthly support was up 4%. In the area of cross-selling, M&A-related and other revenues, such as project fee income, also made a significant contribution. This is sales by major industry segment. In many segments, we experienced year-on-year increases. The main divisions of the company were able to achieve solid growth, with the mainstay housing and real estate growing by 11.8%, and healthcare, nursing care, welfare by 9.6%. This is the transition of the clients by month. Although for only 1 month in 2025, we were below the previous year's level due to increases in per-contract prices. But the results have been above the previous year's level since Q4. It shows the transition in sales of DX consulting, as defined internally, and the cumulative number of companies that have implemented Zoho among the products we offer under the service name Growth Cloud. DX consulting sales increased 6.2%, and the cumulative number of companies that have adopted our Growth Cloud Zoho has increased 15.9%. This shows performance trends in the logistics segment. The logistics consulting sector performed well with a positive 17.7%, and the number of management workshop members increased to 400 members. On the other hand, the logistics BPO area was down 3.4%, in line with the strategy of increasing the consulting ratio. But the increase in the ratio of high-margin consulting contributed to the segment's overall profit growth. Next is the digital solutions segment. Overall, business sales were up 13.7% from the previous year. Sales of HR solutions declined due to the impact of clients' shrinking advertising budgets. This business is currently undergoing a transition to a more profitable consulting model. Looking at the breakdown of digital solutions, sales of SPX increased 21.2%, partly due to the contribution of Apparel Web, which joined the group in April. And sales of IT consulting increased significantly due to an increase in one-stop projects ranging from DX grand design to implementation support. On the other hand, the reduction of subcontracted contract development resulted in a decline in sales of cloud solutions. Next is the summarized balance sheet. The major movements include a decrease in property, plant, and equipment due to the sale of the Gotanda and Yodoyabashi offices, while cash and deposits increased. The company continues to maintain a high level of financial soundness with an equity ratio of 72.4%. Next is cash flow. Cash flow from operating activities has remained steadily positive. The movements in investing and financing activities reflect the sale of the office relocation mentioned earlier. As the last part of the financial report, we would like to share some recent topics. In January 2026, Logicreate joined the group. This will strengthen the supply chain management support for the manufacturing and distribution industries. We have also concluded a strategic comprehensive partnership agreement with Tokyo Marine and Nichido, and will jointly promote the development of new solutions for the sustainable growth of SMEs and mid-sized enterprises. That is all from me. I would now like to explain our midterm management plan, Sustainable Growth 2028, which we announced today and covers the fiscal years 2026 through 2028. First, let's look back at the quantitative aspects of the previous midterm plan up to fiscal year 2025. Regarding financial targets, net sales were 33.33 billion Japanese yen, exceeding the target of 33 billion. The 3-year average annual growth rate is 9.1%. Operating income did not reach the target of 8.9 billion, but amounted to 8.81 billion. The 3-year average annual growth rate is 7.5%. ROE exceeded the target of 25%, reaching 26.5%. The total return to shareholders was 98.1%, exceeding the target of 60%. And the dividend payout ratio was 60.1%, exceeding the target of 55%. Next are non-financial objectives. The number of consultants did not reach the target of 1,150, but reached 1,098. The 3-year average growth rate was 8.4%. The ratio of female managers exceeded the target of 25%, reaching 27.5%. Our GHG emissions reduction target, which is a response to climate change, was also set at 50% of the 2019 level. But we exceeded this target with a 56% reduction. The ratio of outside directors, which is intended to strengthen the supervisory function, exceeded the target of a majority at 66.7%. This wraps up our look back at the previous midterm management plan. Next, I will share our midterm management plan, Sustainable Growth 2028. Aiming for the group's corporate philosophy, sustainable growth for more companies, the group will strive to further expand its business as a group. In particular, we have set a new group vision to be a comprehensive transformation consulting group focusing on medium-sized companies and companies aspiring to become medium-sized companies, as well as growth-oriented small rising star companies, to accelerate the realization of the purpose. Before explaining the forecast by segment, we will discuss the outlook for the recent business environment. Changes are taking place in the environment surrounding domestic companies. Small businesses and sole proprietors are expected to decline in number due to factors such as labor shortages, rising production costs, and the lack of successors. As a result, consolidation will increasingly occur toward mid-sized and larger companies. Those that have stronger growth potential and the ability to promote AI and DX initiatives, attract talent, and expand through M&A. In light of this environment, we have three main business pillars this time. Our first pillar is to become a leading firm for mid-sized corporate consulting. We view the mid-cap consulting market as being divided into two categories: consulting for conversion into mid-cap and consulting for mid-cap. I would like to talk about the first growth market, which is to become a leading consulting company that supports businesses in transitioning into mid-sized companies. Currently, this market for consulting services is expanding, encouraged by national policy. Specific consulting topics include AI, CRM, EC, JPY 10 billion turnover, regional conglomerates, M&A, IPO, human capital management, supply chain management, and subsidies, as shown on the right. We would like to expand on these themes in particular. Second, through consulting with mid-sized companies that are already leaders in their industries and regions, we aim to expand our client base and create impacts on the local Japanese economy. As shown on the left, the top 5 management issues for mid-sized companies are securing staff and human resource development in first place, digitization and DX in second place, M&A in third place, decarbonization and GX in fourth place, and overseas expansion in fifth place. In response to these challenges, Funai Soken Group has reorganized itself into a federation of specialized firms that provide a seamless, comprehensive range of support, covering everything from consulting to hands-on implementation of solutions. The second major strategy is to expand AX, AI Transformation Consulting, and DX Consulting. For AX, we will provide DX Consulting and AI agent development with global partners such as Google and Shopify. As for DX, we will promote DX Consulting and helping clients become CRM-focused, together with Zoho and other companies. The third pillar is to achieve double-digit growth in membership. For our company, which is a stock-type business, the expansion of our membership organization, the management workshop, directly leads to an increase in the number of consulting engagements. To this end, we will also expand our non-visitor content, aiming to reach 10,000 members by 2028. Specifically, the management workshop for SMEs will seek to improve member retention rates by improving its hybrid content and customer success functions. In addition, to increase the number of medium-sized companies and above and regional members, we will promote the expansion of theme-based management workshops and area-based management workshops in cooperation with regional banks and other organizations. Through these three major strategies, we aim to achieve sustained sales growth of more than 10% per year. We aim to achieve growth of 10% or more overall through the growth of each of our core businesses, priority areas, and M&A. This is about the strengthening of human capital management. The group's approach to human capital management is to multiply the number of consultants by ELTV, the value of contribution per employee. The number of consultants will continue to grow, with the goal of reaching a total of 2,000 employees and 1,400 consultants by 2028. ELTV is calculated by multiplying sales per employee, which represents productivity, by the expected number of years of employment. Productivity is targeted at 23 million Japanese yen in sales per employee in 2028, with an expected tenure of 7 years. We will focus on the three drivers of human capital management: increasing the number of consultants, improving productivity, and expanding expected tenure. Specifically, the number of consultants will be strengthened by enhancing new graduate recruitment, enhancing career recruitment, and acquiring human resources through M&A. In addition, productivity will be improved by strengthening early success, promoting the use of AI, and increasing the customer retention rate. And the expected tenure will be improved by increasing engagement scores, sustained annual salary increases, and expanding strategic transfers and dual assignments. In this way, Funai Soken Group promotes a loop model that simultaneously runs the business model and the human capital management cycle to achieve sustainable growth for people and companies. Finally, here are our plans for the coming years. For the year 2028, we aim to achieve the group's net sales of 46 billion Japanese yen and operating income of 11.5 billion. Toward this point, we aim to achieve net sales of 37 billion and operating income of 9.1 billion in 2026, and net sales of 41 billion and operating income of 10.2 billion in 2027. The CAGR for sales will be 11.3%, which is 2.2 percentage points higher than the previous midterm plan. The 3-year CAGR for operating income will be 9.3%, 1.8 percentage points better than the previous midterm plan. In 2026, fixed costs will increase by approximately $600 million due to relocation within the Osaka headquarters. This will temporarily lower the growth rate of operating income. But after 2027, operating income is also planned for double-digit growth. The first financial target is ROE. We aim to sustainably increase corporate value through continued growth, improved efficiency of invested capital, and high shareholder returns, with a target ROE of 30% by 2028. The second financial target is shareholder return. We will continue to provide a high level of shareholder returns through progressive dividends and share buybacks. From 2026 to 2028, we aim to achieve a total return ratio of at least 65% and a dividend payout ratio of at least 60%. Finally, here are the quantitative targets for fiscal year 2028. As previously mentioned, our financial targets are net sales of 46 billion Japanese yen and operating income of $11.5 billion, ROE of 30%, total return ratio of 65% or higher, and dividend payout ratio of 60% or higher. Sustainability targets include a 75% reduction in GHG emissions compared to 2019, 1,400 consultants, an employee satisfaction score of 80 or higher, a majority of outside directors, and at least 30% female directors. This concludes the explanation of the medium-term management plan. Thank you very much.